compared to 4.5% in March. That's according to data released by Statistics South Africa. The inflation rate has gone against market expectations following a steep petrol hike earlier this month.
The recent petrol hike was expected to push the inflation rate in an upward direction, but the annual consumer price inflation rate moderated to 4.4% compared to 4.5% the previous month. Statistics South Africa has cited alcoholic beverages, tobacco and transport, among others, as the main contributors for the decline. Economist Laura Campbell says the market had forecast a rise to 4.6%, while other economists had expected it to remain unchanged.
The decline occurred despite the fact that there was a sharp increase in the fuel inflation rate in the month. If you look at the different components making up the CPI inflation rate, there were many of the components, the inflation rate actually came down in the month. And what this tells us is that businesses have been unable to pass on cost increases to consumers that have arisen from the depreciation of the rand because demand within the economy is so weak.
The inflation rate has stayed within the South African Reserve Bank's target band of 3 to 6%. Campbell says the decrease eases pressure for the Reserve Bank to either hike or cut interest rates. She expects the Monetary Policy Committee to leave the repo rate unchanged when it announces its decision.
Looking at the effects of this latest inflation rate and what it means for interest rates, it enhances the view that the Reserve Bank will opt to keep interest rates unchanged. Inflation seems to remain under control and it declined unexpectedly. And if you take that into account with the fact that economic growth remains weak, we expect an unchanged interest rate outcome for the remainder of the year.
Inflation has remained within the bank's target band since March last year. Mbalenhle Mthethwa, SABC News, Johannesburg.